Hi there, welcome once again to the Dukascopy TV studio. I'm Ben Jones. Alongside me, I have Dukascopy TV regular Jean-Francois Owczarczak. Jean-Francois, thank you very much for coming in today.
Thanks for having me, Ben.
Not a problem. Now, we've had strong US inflation data today, but relatively speaking, it's quite a quiet time of the year. So can we begin by having a recap?
Yeah, I think it's a good idea. We're going to have a look at our usual directory that we use for this show. And we're going to look at the investors' views, so weekly, daily, hourly, and quickly recap the main assets we usually look at. On the directory, we have euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures and 3 months Treasury futures. So let's start with the euro. And this is an investor's view. An investor's view is a combination of a weekly chart, a daily chart, and an hourly chart. And we call it markets in 3D because in a matter of a few seconds you could get an initial opinion on how the trends interplay. So for example, here you have a bull trend on the weekly, a bad trend on the daily, and a bad trend on the hourly. And we get an automatic messaging which basically says potential consolidation period in an uptrend. So you have the uptrend here on the weekly, and both the daily and the hourly are in a downtrend, so it's a potential consolidation period in an uptrend. Now, if you want a bit more of an explanation, you could pop it up and you have a more verbal explanation of this situation. Now let's pop it out, go back to the charts, and let's look at the weekly. The weekly's been basically consolidating up for almost 2 years. And at the moment, it's only a consolidation up or a correction up. You can see it here. The target estimates are labeled corrective up, which means that this is an initial move from this bottom here in 2012, and it never really accelerated to create an impulsive move. In order to create an impulsive move, it would need to move above 140.43, and then you would have another set of targets which could bring you much higher and a much stronger trend. But at the moment, if we want to recap this, the euro over the long term on the weekly has made its correction up, has pretty much reached the targets, and now the question is it going to break through the 140 mark and create an impulsive move, or is it going to roll over in what could be a resumed downtrend? Now, to get some clues about that, we'll need to look at the daily and an hourly. But we could also initially say that what is interesting here is that the risk index is already quite high. It's close to the overbought zone. So that is not a very good omen for an upside breakout. Now, if we look at the daily, it's correcting down, and it has been correcting down since mid-March. And similarly, at the moment, it's only a correction. But the time imparted to that correction was over pretty much mid-June. We had reached the targets, and the next step is really moving below 135. Well, it seems like we're very close to it these days. So if we were to break quite significantly through the 135 level, that could open the door to an impulsive move down. And that impulsive move down would basically be in contradiction with the longer term trend and could be the first confirmation that we are resuming the downtrend on the euro. Now, going back to the daily, we must say that we're a bit oversold at the moment, so we might have a bit of work here. But nevertheless, these are very important points. And moving below 135 is the first indication. If that move accelerates, I think we're in for a longer term, or could be a longer term, a reversal of the euro to the downside with the dollar moving up. With inflation accelerating in the US, and the differential could be quite a nice explanation. Now, over the very short term, it seems like we're pretty much exhausted here on the euro. There's probably not a week to go, and it could lead us down slightly below 134. So what we'd expect is an initial breakout, a correction up, probably probably during next week, and then if the daily is correct, continue the trend to the downside. Now, we spent quite a bit of time on the euro, so I'll try to move quicker on the other ones. So very rapidly on cable, also an investor's view, weekly, daily, hourly. Both the weekly and the daily are in an uptrend. The hourly is consolidating down. The message says potential intermediate top in an uptrend, which means that although we could see here both the weekly and the daily are quite, the targets are quite fulfilled to the upside, especially on the daily where we can see it says impulsive up done. We also in the red here in the overbought zone, and both our envelopes are touching each other, calling for market stress. So it's quite an expensive area. So although we have to trust the trend, it's still heading up. There's not much more to be won on cable to the upside. And to the downside, the hourly is consolidating. It's only a consolidation for now, but the warning signal would come slightly below 170 if we were to go impulsive on the hourly chart here.
Okay, now what are we seeing from S&P and gold as well?
Okay, well, let's jump to S&P. Well, as we have been saying over the last few weeks, it is a very expensive market. It is an overvalued market, and especially in terms of the shorter term frequencies, meaning the hourly, which has been pretty much bouncing in and out of overbought for the last few weeks. The daily, for which the targets are exhausted. This seems to be, just focusing on the hourly, we're still in an uptrend, and we seem to be trying to initiate the last move up, and we probably might twitch it up to reach the 2000. Over the daily, we're pretty much exhausted, so at some point we might be anticipating some kind of consolidation here. But all in all, the trend is still your friend. You still have 3 bulls, and the longer term still does have quite tentative targets because they're labeled impulsive 2, which is our more aggressive targets, but it could still lead us up to, in the best case scenario, up to 2,215. So I'd say over the short term, probably a bit of consolidation, but until the end of the year, for the time being, we don't see a turning point yet. It might come, we might see the daily starting to roll over, but at the moment it's not in the charts. And finally, on gold, well, the investor's view here highlights a nice little contradiction. It basically means that you have to take the signals with a pinch of salt. Usually the trend is your friend, so we're still focused on a longer term weekly chart here. The weekly chart is still heading down. This is only labeled a consolidation for now, and there's still another move down towards the end of the year. So that would be our main point of focus. Now the daily has turned up and is showing some tentative upside targets below 1400. To be honest, we'd probably need a confirmation here to have a bit more of a second leg up and confirm the tops that we recently did in July to be able to justify that, especially that the weekly is still heading down. And the risk oscillator is still quite high here. So at the moment, I would not caution that second move up until we have a bit of a positive signal on the hourly. And at the moment, the hourly, which had been aggressively up during end of June, early July, has consolidation down, has indeed went below its corrective targets, and is showing new downside targets. If that remains the same, and as long as that remains the same, I trust the weekly and the long-term downtrend.
Jean-Francois, once again, it's been a pleasure having you in the studio today.
Thank you very much.
Jean-Francois will be back next week, but until then, make sure you keep clicking back for plenty more updates and exclusive interviews. Bye for now.